Hey everybody, it's Greg Rice, and we're not at Nexus's headquarters in Pawtucket, Rhode Island. We're at HomeSmart's Rhode Island headquarters here in Warwick, Rhode Island. And with us today, we have Emilio DiSpirito of the DiSpirito team. How you doing?
Greg, good. How are you, man?
And we also have Barbara and Joe with RI 1031 Exchange located in Johnston. And what we're going to do is have a conversation with Barbara and Joe about what they do and answer some common questions that we have from investors as well as home purchasers and home sellers. So Barbara and Joe, thank you very much for joining us.
Thanks for having us.
And I kind of want to let you guys guide the interview. Tell us a little bit about what your job is, what a 1031 exchange is, and things that you want, the audience to know about.
Well, the basics of a 1031 exchange are when an investor is selling investment property and planning to use the proceeds for more real estate investing, they can defer the capital gains tax they would normally owe on their sale as long as they follow the IRS guidelines to make sure it all complies with the code. And within certain time frames, they can roll that tax obligation into their next property.
Joe, how much is like the capital gains or Barbara, how much is like the capital gains that somebody would be paying on, say, $100,000 in profit?
Okay, tax question is not easy, or not simple, I should say.
I know it was a loaded question.
The way you're taxed on the sale of an investment property is the first level of tax is your depreciation recapture.
Okay.
That's taxed at a flat 25% federally.
Okay, can you explain that in layman's terms, depreciation recapture? Because even I'm like, this is still something I want to learn a ton about.
Certainly,
a little green to it still.
Certainly.
Okay.
So the depreciation recapture is calculated based on the depreciation that you've deducted on your tax return over the time that you've owned your property.
Mm-hmm.
So each year on your tax return, you're allowed to have a deduction against your rental income for a portion of the cost of your property.
Mm-hmm.
That's called depreciation. When you sell that property, the first level of tax you pay, if there's a gain, would be to recapture that depreciation. So IRS would say, okay, if you have a $100,000 gain,
Mm-hmm.
how much depreciation have you taken over the life? If it's $30,000, that first $30,000 of gain would be taxed. What they are trying to get at is ordinary income, but they've assigned a flat 25% to that.
Okay.
The next level of tax would be your capital gain tax, and right now it's favorable over ordinary tax. For most taxpayers, it's a 15% federal rate.
Oh, that's not bad.
That's not bad. For higher income taxpayers, very generally, income of $400,000 or more, very generally,
Yeah.
the capital gain rate is 20%, and that's federal. So then we would also be responsible for the state portion, depending on what state you're in.
So let's do a simple example, right?
Mm-hmm.
So say, let's take my property for example. What figures do you need to know about the property in order to give the audience maybe a breakdown that we could put on the screen here so they can kind of see in layman's terms like you're talking about? So I bought this property, it's a multifamily for $100,000 in 2016. I'm selling it for $530,000. So what in between else do you need to know, and how does it affect, what amount I have to use for a 1031 exchange, or is taxable, etc.?
First of all, we generally bring your CPA in for the conversation.
Yeah, they'll know the full picture of your.
Yeah. So, but we would need, or your CPA would need to take a look at what depreciation you've taken since 2016.
So say, just for conservative purposes, say $20,000.
Okay, so now your basis is calculated at your cost, your 100 minus the depreciation you've taken. So now you have basis in that property of 80,000. So if you sell for 530, you would have a gain of 450,000. Now, if you were to do a 1031 exchange and you were to reinvest equal to or more than the proceeds, equal to or more than your sale price as adjusted.
Got it.
So let's just use the 530.
Okay.
If you were to reinvest equal to or more than that 530, you would, all of your tax would be deferred.
Got it. So the sale price is really what is most important.
The sale price.
Yeah, that's our rule of thumb. You want to be reinvesting equal to or more than your sales price for a fully deferred exchange.
Got it. So if you're following along at home and thinking, okay, maybe I get $100,000 left, from this sale, you have to buy something that's $530,000 or more.
Yes,
Yeah.
exactly.
There's a caveat though,
Okay.
and you get to deduct the commission
Yes.
from the real estate agent. So
Mhm.
pay your real estate agent as much commission as you can.
Great advice.
Yes, that's why I say sales price as adjusted. It's as adjusted
Yeah.
by most of your ordinary transactional expenses. Your sales commissions, your attorney fees, our fee would be deducted from that as well.
But not the seller's mortgage. So
But
if they
not the
seller's
refinance
mortgage.
it and say have a mortgage now of $300,000 or $400,000, that's irrelevant. It's the purchase price, these fees you just mentioned, and the sale price.
Yeah,
That's it.
one of the common misconceptions is they just have to reinvest the amount of cash they'd be walking with.
Yeah.
And that's not the case. That's
Got
getting away with a little too much.
Interesting.
Right, what IRS is looking for you to do is to continue your investment in the same general level.
So elaborate on that. Maybe talk about what you can use the proceeds for. Like say I'm selling an apartment building. It's a commercial
Mhm.
apartment building. Can I go and buy a restaurant? Can I go and buy multiple single family homes? Or do I have to stay in the tenement business?
With the 1031, it's pretty generous when it's going real estate to real estate, which it all is now. It used to be 1031s could also apply to certain things like equipment or trucks or fleets of aircraft, things of that nature. But the latest tax code change about 2 years ago brought it back just to real estate. So it used to be referred to as like-kind exchanges a lot too. So people thought, like you're saying, if I sell a condo, do I need to buy another condo? That's not the case. It's essentially any real estate is like-kind to other real estate. It does have to be investment property. So whether it's held for capital investment, if it's a lot of land, for example, it's not like you're showing rental income, but that's still an investment property.
So it's pretty generic. Almost.
Yeah.
It's very generic. It's basically anything that's categorized as real estate.
Now, like you mentioned, a restaurant. If you were buying out a existing restaurant and their business, only the real estate portion would qualify, not the goodwill of
The
the
business
clients
itself.
of the pizza place. Yeah.
Got it.
Right, which we do need to be careful when we look at a purchase and sale agreement. Sometimes they will include things other than real estate, so we need to either have a separate agreement just for the real estate, or we need to allocate prices within
Got
the purchase and sale agreement. That's optimal, I should say. We work with less than optimal.
it. Which is why you're hired. So that's an important segue. If you're listening at home and thinking, I'm gonna get a check for $400,000 and then I'm gonna buy the real estate, that's not the case because you hang on to that, right?
Yes.
You collect
Yes.
that check from the closing proceeds and put it in an escrow account
Exactly.
and then put it down towards the next purchase or purchases, is that
Right,
correct?
procedurally what happens is we interact closely with the closing attorney. And the closing attorney needs to have certain language on the settlement statement, and they wire the funds directly to us.
Got it.
Yeah, the owner can have no access to the funds at all.
Yeah, that's one of the requirements within the tax code. Any cash that the client were to touch at the closing or gets wired to them or they walk away with a portion of it is taxable at that point. That would blow the 1031.
Got it.
Makes
So-
sense.
Well,
Yeah,
except
just
as to a partial.
yeah. The partial is a different story. So if you wanted to walk away with 20,000
Okay.
and put the rest into a 1031, you can,
Yeah.
just knowing that you're paying tax on that
Right.
portion.
Got you. So it's all a number. It's just a shell game. It's all a number kind of shuffle.
Right, it does,
Depending on your goals, yeah.
it doesn't have to be all or nothing.
Yeah.
Is-
Okay.
Is what Joe's trying to say, I think, because we do have clients that come to us and say, well, recently, we had a gentleman who said, if I sell this place for $800,000 and don't buy my wife a new car, I'm a dead man.
Got
So
it.
he
So you have to put a little bit aside.
$5,000 he took for the new car.
Joe suggested that he just, what did you say,
I
why don't
actually
you lease
suggest-
something for us?
Yeah.
It was funny, but anyway,
I have a good solution
yes,
somewhere.
you are able to do a partial exchange.
Okay.
Just knowing that whatever cash you take from the closing,
Is
it
taxable
would
at
be
your rate.
taxable, yes.
So also talk about, say, I don't know where to place this question, I'll ask it now though. So you go to buy something and you don't spend all the proceeds, it's the same way, it's left over after the 6 months or 90 days or whatever the period is, that's just gets cut from you back to the seller and then they're
It's
taxable
taxable.
on the leftovers?
Exactly.
Yes, yeah, whatever cash they receive back.
Okay.
So you got into the timeframes a bit.
Yeah, I wanted to ask about
Yeah.
that.
So there's two really important 1031 timeframes. It's the date by which you have to identify potential replacement property and close on property. So you have 45 days to identify from the date of your sale closing to ID up to 3 parcels typically.
Mm-hmm.
There's some special rules.
So define identify.
Yeah, there's a formal process, just paperwork driven that we need written addresses, property addresses is all we need. You don't have to be under contract on
Okay.
replacement property to identify it, but it has to ultimately be something that you do go forward and reinvest into.
Do they have to be on the market?
They don't have to be on the market now, and
Okay.
most of our 1031s aren't.
So it could be a seller finance deal, it doesn't need to be a traditional mortgage, with a lender and all that. You could just call your friend and say, hey, will you sell me these rentals
You
and
can.
get
Yes.
an
That's
agreement in
fantastic.
place?
And
Yes.
some people they like to, target their dream property and then have some contingency backup, plan B and C in the event that one falls through. As you know, in real estate, anything can happen.
So what about after 45 days? I can't find something.
Your 1031 would fail if you're not
Oh.
able to identify by day 45.
No extensions.
No, we had
No.
one extension very recently due to COVID.
Okay.
The president declared a disaster nationwide, and therefore Treasury issued some regulations that allowed an extension of the 45-day period
Oh.
just for certain transactions that were underway and whose 45-day period fell between certain
Got it.
dates.
Mhm.
In the past, what Treasury has done is issue a blanket 120-day extension for any deadline, the 45 or the 180,
Okay.
which was easier to work with.
Oh,
Sure.
yeah.
But they didn't do it. There's lobbying groups, trying to get Treasury to issue some more guidance so we can have some more extensions, but because, it's tough out there.
Yeah.
It sure is, definitely. So once you get to that 45-day point where you've identified up to 3 properties, how long do you have to close on the 1 or the up to 3 properties that you've identified?
It's 180 days also from your sale closing. So those two timeframes run concurrently, and
Okay.
so that's rarely an issue for our clients unless they're targeting maybe a foreclosure where lenders create some time hiccups that
Or short sale.
or short sales.
Yeah.
So
Oh, yeah.
Long sales.
typically the 45 day is the pressing time frame for our clients
Okay.
among the two.
Okay. Wow, that's not bad. So you said 180 days total?
To close, yeah.
Wow. I mean, so we close houses in 2 weeks
Yeah.
sometimes.
Right,
so-
if you can identify by day 45, it's rarely, like Joe said, it's rarely a problem to be able to close on something, within that 180.
And you were just talking about before we came on here that there's a potential, or it's on the table, if you will, that 1031s are used to offset a budgetary proposal for a presidential candidate. Why don't you tell us a little bit about
Yeah,
that?
I just was reading that Vice President Biden has put forward a program to fund a lot of different social programs by eliminating the 1031s from the tax code, and also having no capital gain preferential tax, but having everything be taxed as ordinary income. So that would really hinder our investors.
How many
Wow.
people do a 1031 exchange every year? Do you have any statistics on something like that?
I used to, but
Yeah.
Or if you would guess?
I don't want to say offhand, but we see a good amount, and being focused very mostly in Rhode Island and Mass,
Like how many do you guys do in a normal year?
about 100,
Okay.
and we're still, generally young as a company. We're in our 5th year. For such a niche and specific thing, we do see a lot of them. Our best sources of referrers is real estate attorneys and CPAs and realtors, who have an understanding of it.
Yep.
And, the seller will always call one of those three before closing, and then hopefully they open up the conversation. One of our least favorite calls to get is, I just closed last week. I'd love to do a 1031 with you.
Oh.
And
Believe it
that's-
or not, realtors are guilty of that.
Really?
I'm very surprised because I know most realtors do stay up on current things
Yeah,
and all that,
yeah.
but every, I don't know, quarter I'd say, we get a call
happens.
from a realtor.
Hopefully
what
they watch
happens?
this video.
Yeah, Exactly.
We just
Yeah.
closed on something and,
What do you do? Or you can't do
there's
You
anything?
can't do
nothing you can do.
anything.
Once
There's
the-
no
If the
retro-
cash is moved and the closing's recorded, there's no going back.
No, there's no going back, there's no, that's not great at all.
And it is a really great tool for the real estate agent who has the awareness to, make that 1031 tool available to their clients if they didn't know, because you're now getting two commissions, the sale and the purchase,
Right.
and it's at a higher sales price because, you got an extra 50, 80,000 to invest. So, and it's time bound, so that's happening in half a year, at the most.
Yeah,
So, and it makes them happy.
it makes sense.
Yeah.
It does make sense, but any client that intends to reinvest.
So the big question, I think I know the answer to this, but the big question I think people would probably be asking is why would the government, why would the IRS allow for a 1031 exchange? Why would they allow for almost like a tax shelter, if you would say?
Mhm.
Why would they allow something like that?
Well, it does have a lot of history. It's been in the tax codes since 1921, and the major intent for it is to prevent an unfair taxation. So if you were, if you had a general real estate investment for 30 years, but it happened to make, little deviations as you go with sales and purchases, they found it unfair to be dinging you each time if you're generally continuing to invest. And it does encourage more domestic reinvestment because you can't sell in Rhode Island and buy in Spain. It's restricted to the U.S. and our territories, right?
Yes.
There is a lot of congressional intent to why it's there and why it stayed there.
So it spurs internal growth, and it
Exactly, and it's ultimately good for the economy.
absolutely, it makes sense why, why, and not to get political, but why, I don't know, I just think it would be awful for our economy to take it out of the tax.
Yeah,
It would be.
and it would disincentivize people getting into real estate and
Yeah,
And it would make people not want to sell.
yeah,
It would hurt you.
it would hurt everybody,
yeah, very much so.
ultimately. And the real estate industry that has really been one leg in the economy that has always been pretty consistent.
Mhm.
There's been a couple blips here and there, but ultimately real estate over time
Pulls
offers
through.
you the best,
Sure.
appreciation. It's the safest, most solid investment instrument that I see. And the wealthiest of people in the world started usually from nothing.
Yep.
Blue collar, or they started from not even blue collar. They just started from rags.
Yeah.
And they went rags to riches by leveraging these different tools that we have. So I think that this is some really awesome information. I appreciate it.
Absolutely. So the biggest question on my mind, Barbara and Joe, is how much does a 1031 exchange cost? So if I engage your services, what am I going to be paying, and are those deductible off of my basis like we were talking about?
So our fee for a forward exchange, which is where you sell first and buy second, our fees are $1,250.
Okay.
And that fee is paid at or after the closing on your sale. So if for whatever reason your sale were to fall through, you would not owe us a fee. We don't have any ancillary fees, we don't have any wire transfer fees or account maintenance fees or that sort of thing. So you'd be looking at a flat fee of $1,250 for the entire transaction, your sale and your purchase.
Yeah, the only surcharge that comes up is if someone sells one property and reinvests into multiple. We just charge an additional $500 per extra replacement property.
So it's only upon success, though.
Yeah,
Well, only upon success of your sale of the property
Yeah,
and relinquishing.
not the entire 1031.
Got
Right, not the entire.
So once you
10.
enter it,
Right, so if you were to say, not be able to consummate your exchange in the 180 and it fails, our fee would still be
Got it.
paid and,
Because you did perform that
Yes.
service.
yes.
Yep.
So generally, we get paid from the proceeds we escrow.
Yeah, so we don't need anything up front,
Right, that's right, we don't need anything else.
and it only comes if and when they close.
And then I say for a forward exchange where you sell first and buy second, because there are also reverse exchanges where you, wait, I said that backwards, didn't I? Where
No, you said it
A
right.
reverse exchange where you need to buy your replacement property first
Ah,
and then sell
Wow.
your relinquished property. And there's construction exchanges where you buy land and make improvements to it to bring it up to the cost that you need. Those require us, for various reasons, to actually create a new single-member disregarded LLC to acquire the property for the taxpayer.
got it.
And those are fees of $4,250.
That's a
And that-
lot of work, so.
Yeah.
It's a lot of work and it's a lot of risk on our part as well because we're owning property.
Interesting.
You know, on behalf of our clients, although we'll never own it for more than 180 days. But the client's also responsible for out-of-pocket expenses in those circumstances as well.
Got it.
So they would be responsible for things such as the disbursements to create the LLC, to maintain the LLC, to dissolve it, that type of
Insurance, who insures it?
the taxpayer, the owner would actually pay for the insurance.
So the confusing thing is that technically the LLC that you own would own the property.
Yes.
But basically the person that's acquiring it or getting it from the LLC.
Yeah,
What-
and we give them full control with an operating agreement and triple
Okay.
net lease, so
Yeah,
practically speaking, they call all the shots.
Yes.
still.
And you call that
Technically
a single-member disregarded LLC?
Yeah, that's the way it's
Yes.
taxed, and
yes, it has to be disregarded. We have a company called Exchange Title Holder LLC to handle the reverse and construction exchanges. And so it's Exchange Title Holder who's actually the owner
Got
on each of those
on
that
each
we have
of
to
those,
pay.
yeah. But what we can do at the end of the transaction when you're ready to finalize the exchange is rather than sell the property to you, rather than this LLC selling the property to you to complete the exchange, we can transfer the member interest in that LLC.
Mm-hmm.
So that's why we need to create it as a single member disregarded, so it's easy to transfer and there's no tax due on the transfer and that kind of thing. So-
And yeah, part of the reason for the added complication for a reverse is the IRS won't allow you to own both properties during the exchange at the same time. So essentially it's a lot of smoke and mirrors for us to almost turn it into a forward exchange. We park your target property in this company we create. When you're ready to sell, you sell, and then you buy that from the company
Mm-hmm.
in the forward fashion.
So
It's
it could
just
be-
a lot of regulation to follow
Yeah.
along
Yes.
the way. But we take on the complicated end of it and try to simplify it for our clients.
it. Yeah.
Another big question I think people would have would be like, is this something somebody can do on their own? Do you have to go through a company like yours to do this, or is this something, and I don't know why anybody would want to, about what you're telling me, but is this something somebody can do on their own?
You can't. It is the only very rare case is if you were having a simultaneous closing where you're basically swapping deeds, which you don't see much of, I'm sure.
No.
Otherwise, if it's anything using the benefit of a deferred exchange, so using those time frames and having some time between closings, that will always require a qualified intermediary. That's what we are.
That's awesome.
And what's one of the most memorable things that's ever happened in your course of business? Could be a funny story, it could be a horror story, it could be, what's something that you'll always remember?
Our very first exchange, and my background, I was doing 1031 exchanges prior to Joe and I starting this company with a law firm.
Okay.
So, I did have some experience and we did a lot of real estate transactions through that firm. But our very first exchange came in when I was in Vegas with my husband.
Yep. And I was learning everything
And
as
he was
fast as I
learning
could.
everything. And it was a lady who was selling her
Backhoe.
backhoe.
This is when you could do it for non-real
This is-
estate.
Yeah.
And so, of course, all of our documents were drafted for real estate transactions. So I'm on the phone in Vegas trying to tell Joe how to change this exchange agreement so it's going to qualify for a backhoe. And it was,
That's fun.
It was fun, right?
it was fun, it was fun.
Like a construction backhoe?
Yeah,
Wow.
that's exactly right.
And this lady, she was.
They're expensive.
She was a character.
Was it that much money? Like,
Well, the thing is, remember, equipment can be depreciated very quickly.
Yeah.
So you could have a
God.
$50,000 excavator with zero basis. So if you're selling it for 50, you're looking at all tax.
Yeah,
So-
that's another reason it's
Yeah.
important to understand how depreciation factors in. You might have bought something before the crash in the mid 2000s and bought for a high price, sell for something near the same price, and think, oh, I don't have a gain, I won't bother with a 1031. But you might have 80,000 in depreciation,
ooh,
so that's all factored into your basis.
Solid
You
point.
It's good to know. So it's not just about sale price.
That's right, you could sell
Tax
for
basis.
less than you paid and still have a gain.
Do you have to depreciate properties? You don't have to.
You
It's
do
just a
actually,
tax
no,
incentive,
the
right?
tax code requires that you recapture depreciation allowed or allowable.
Oh,
So you can't choose to not depreciate, or you can not take the benefit of it, but you
yeah.
don't have
it
to.
would come.
Yeah, but
with it.
That's right, there
So
would be
you
no
could
reason.
potentially end up, like in your example, you got $80,000 in depreciation, and then you sell it, and you're like, oh, I'm all set, and then so you get a bill for 24,000.
Yep,
Yes, exactly,
and that's
And
your
you
wake up
didn't
call.
Wow,
yeah.
that's a great point.
Government's gonna always win.
Well, this is why we like to bring the CPA in too, but like, that type of
Yeah.
person may never make it to our phone call.
Yeah.
They may just think, oh,
Why bother?
I'm not gonna
Yeah.
gain, why even call my CPA,
Mm-hmm.
so.
That's a good nugget right there.
Yeah.
That's some great information.
And how about the biggest transaction you've ever did? You don't have to say names or anything like that, but what's the biggest amount of capital you've seen move? Or
Was
is
it
there
the artwork?
is there a
or-
limit on it, or is
Possibly. Yeah. Around 6 million probably.
Yeah, it was around 6 million, we had a client who used, when it was allowed, sell artwork. He was an investor in artwork, and he had some serious gain on his artwork, and he saved a lot of money. But we've had some real estate transactions close to that as well, 4 and 5 million.
Mhm.
And
so you can't do it for non-real estate items anymore? You're
that's
saying?
right, as of
Correct.
January of 2018. that-
Really?
Oh, the new tax code.
I'll be honest, there was a lot of abuse with that, because
Sounds
even
like
when we're
it.
talking
Yeah.
about the art investor,
Yeah, the
Yeah,
technicals of
Anything
it.
could be art.
Yeah.
anything could be art, and
And saying personal use versus
versus
Investment.
appreciation is very hard to
I'm
say.
holding this gorgeous print that my wife and I look at every
Right.
day.
In our home.
But it's an
You know,
investment,
in our
yeah.
home, but it's an investment. So there was a lot of abuse with that. I understand, I understand them reining in on
Mm.
But do you think that was a step in the direction of wiping out?
I highly doubt
that.
it.
I don't.
It's because it was probably 95% real estate anyway,
Mhm.
even with the code more wide open back then. So there's just way too much at stake with it in the
Yeah.
real estate world.
I think it would be seriously detrimental to the economy if they were to take 1031 exchanges out.
Yeah, because some people, there's a ton of misconceptions out there. They think, oh, it's a loophole, it's a scam,
It's for the rich.
it's for the rich.
Absolutely not.
It's all wrong,
Just dispel that myth. Why is this not just for the rich?
Well, most of our clients are, a mom and pop investor who had 1 or 2 multis as they, went through their careers. From the sample of what we see and who we help, day to day, it's very much so beneficial to anyone who owns real estate, which doesn't just mean the uber wealthy.
No.
It's rags to riches, and we were talking about that a
Exactly.
little bit earlier. And so in our country, in the United States, you can literally come from nothing. You just gotta know, you just gotta read, you gotta have knowledge, you gotta watch these, you gotta read blogs, connect with the right people that do it, and you can literally do that. But I think what happens is I think that there's some people that are complacent and don't wanna do that, and those are the people that are saying, hey, or the people trying to push legislation to get rid of this for various reasons,
Yep.
are trying to keep people down for a reason. And they use things like, oh, it's only for the wealthy, for the rich, and people hear it and they believe it without
Yeah.
doing the research, but those are the same people that wouldn't do the research to get it anyways.
Exactly.
So they want to ruin it for everybody else, which makes absolutely no sense.
Yeah,
So that was a solid question too. Yeah.
definitely.
So what else, before we wrap up here, would you want the audience to know or keep in mind, or something that might make your job easier when they come along and say, hey, Barbara and Joe, I'm ready to get started?
Advice we like to give to make sure people have successful 1031 exchanges is to really, use the time before your sale to begin the search process if you don't know exactly what you're going to get into for replacement property. The more clear of a picture or area or property type that you have in mind, the better it's going to go, the higher your chance of, following through with the replacement property. And
don't hesitate to call.
Yeah.
We're very accessible. We really pride ourselves on being accessible.
You guys are.
So
Let's put that on the screen. Why don't you tell what your preferred phone number is, maybe an email and a website too?
Sure.
My email address is my first name, Barbara, BARBARA, at RI1031exchange.com.
No hyphens or underscores?
No.
Or,
None of that.
I hate those.
No.
Yeah, it confuses everything.
And my preferred phone number is my cell. It's 401-474-3545. You can also reach us at our office line at 401-333-6107.
And my cell is 401-465-7790. And my email is joe, Joe, at ri1031exchange.com. That's also our website where we have more info about our background and what we focus on as a company.
Awesome. And how many of this business exists? I don't know of any. Locally.
Locally, people that you can shake hands and we'll attend the closings for you
Yeah.
when we're not in COVID.
There's not much at all.
Not much at all.
Yeah.
There are, like Joe had referred to earlier, there are some attorneys that will do it as an ancillary part of their practice.
Got it.
But an attorney who's been your attorney for any reason for the prior 2 years is automatically exempted from being your QI.
Really?
They're considered your agent. So that really, makes that not really a good choice.
It's got to be a third party.
It has to be an independent third
Mhm.
party.
Yeah.
So
A couple of banks offer
there's a
the
few
service
internet
and
companies,
online
but
companies, but
actual companies like ours, I would say there's only one.
Yeah.
yeah.
You're
I
good.
got 2 recommendations, you guys and then someone out in New Hampshire. And I was
Yes.
like, wow.
Yes,
That's great.
that's Charlie,
Yeah.
and he actually used to be the go-to guy in Rhode Island for 1031 exchanges.
Wow.
And he's a great resource for us, to
Mhm.
be honest. He's an old.
And they know him, they know the other
Oh,
companies.
yeah.
We're on good terms.
No, we're on good terms.
That's
And,
Look at that.
he's a great resource. He's an attorney, so he sometimes, he's great to bounce things off of. He's got more experience than we do, but he is not local any longer, and he is actually referring his more complicated cases to us.
Wow.
Full circle.
Yes.
Yeah.
Yes. I was just speaking with him yesterday. I had an interesting one I just wanted to bounce off him, and his advice to me was, you'll make more money writing a book about this guy than you will doing an exchange for him.
Wow.
It's interesting, it really is interesting content, there's not a lot of information out there about it.
Mhm.
So, yeah, I appreciate getting to know all of this, I'm sure everybody viewing
Yeah.
does
Yeah,
too.
we appreciate the opportunity.
Yeah, we like
to
opportunities
share
to-
information.
Right on.
Get the word out there.
Good stuff.
Cool. So if you're watching this, you have any questions, you can contact Barbara or Joe, or also post a comment below, and we'll get you in touch with them. And this is incredible. You guys are really a niche business, New England based, and you can service properties that are sold in all the different states, or is there a
Yes.
territory?
No,
All 50 plus territories.
Yep. And we do see a lot of sales from the greater Providence area reinvesting into Florida. A lot
That's
of
interesting.
target zones in the Carolinas and stuff. We see
Territories, can you invest in like Puerto Rico and the Virgin Islands and
we had a St. Martin.
Yes.
That's
But
cool.
well, the thing about St. Martin is he sold
buy a
in St.
hotel.
Martin and he bought in
Right.
St. Martin.
There you go.
Yes. So, but like kind.
Some caveats there.
Yeah. I would be wrong to answer off the cuff on that
Okay,
because I'm not 100%
Do you mind
sure.
looking into that?
No, I'll be happy to.
Yeah. awesome.
You're gonna wind up there?
That's great. Maybe why
I
not?
like
So
it.
you can, if it's not if your property is not located in the US or one of the territories, and you can sell and buy in that same territory and it would still qualify as a like-kind exchange. It's just you can't go domestic to foreign.
Got you.
Makes sense.
So, yeah, we did have a gentleman sold property in St. Martin
Yes.
and bought in St. Martin. Oh my goodness. It's a different world.
Yeah.
Tough life.
Yes.
Yeah,
I know.
Awesome
We're
stuff.
up here in Warwick,
Yeah.
West Warwick almost.
Yeah.
All right, well, like I said, any questions, anything, just post a comment below, contact Barbara and Joe. And again, Greg from Nexus here at HomeSmart's headquarters in Warwick, Emilio, team leader of the DiSpirito team at HomeSmart, and Barbara and Joe at RI 1031 Exchange.